Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today's Wednesday, October the 29th, and this is the Moneyball Morning Report for the Benzinga Pro platform. Charts by TrendSpider and Gamma Lines by the amazing Mentor Q. So let's start. Let's take a look at the E-mini S&P. We're looking at the hourly chart here, and we can see that we are continuing to trend up. We are 100 and almost 100 points above the value area high over this recent formation. Let me pull this in just a wee bit more. Let's see if that value area shifts a little. It should not, because we are breaking out into new formations. This support edge at 6,937 is a little wicky, so I am actually going to remove it. It's a slippery line. We can see that we're moving all the way down. Our 1 hour opening candlestick, you can also use the 30-minute. We're going to see that same sort of business. If we slip into our standard 30-minute, we can see that the 30-minute high is the floor of support in the pre-market. And so that's where we'll keep our eyes. 6,931 moving up. You can see we've had a big move up in 2 days, and now we're starting our third day looking like the same pattern as yesterday. No? Take a look. Round, spike down and up, round, spike down, and maybe we continue up. This motion here did not occur until the opening range formation. We are far away from an upward trending 63 moving average. Our anchored VWAP from the prior day is 6,920. We've got to take a look at that. That's going to help us if we slip before 6,931. The stair steps down are a little bit more aggressive. Now, backdrop is the volume yesterday was very tepid, very, very tepid. And the largest candlestick of the day was the closing 30-minute candlestick, and it was bearish. Now, a lot of times I don't really care whether it's bullish or bearish. It's just telling me what the relative range is. And so we're going to keep an eye on that box to see how well we stay out of it. First time we went out of it, we came back, came all the way back down to the high of the opening 30-minute candlestick. Now we're looking like a double top. Could you short this? Absolutely. We've shifted more of the price action over, so the call wall and the value area high intraday on the 30-minute are both sitting at 6,950. Our next gamma line of importance is 6,975, and we have, wow, it's moved up again. 7,125 becomes the new call wall. Very interesting. So everybody's planning for upside pressure, except these 0DTE guys. So what's going to happen? What's happened the last couple of days is that we literally have just blown past it. And I suspect we may blow past it again. What is the framework? Dips or buys. Where's that best edge? First best edge, 6,931. After that, get out of the way from a long perspective, wait for the framework to break, and then retest a lower high. Right now, if you watch that SMB Capital video that I sent to us in general, we'll see that we've got pinball action around the VWAP, and that tells us that we are caught in a range. So let's wait until it gets to the bottom of the range, or you can try yourself a short here, 5 points of risk or so for the fade. Today is an FOMC day. And, once he gets on the podium, the big questions they're going to ask him are about liquidity and the beginning of quantitative easing against a market backdrop that looks like stagflation. There's a storm brewing, but for right now, We're just going to worry about what we're doing from day to day, intraday, in and out of the market. Let's get to the NQs. Call wall, also this gamma wall has moved up. It's 26,300 today, but it is the top of the call wall also. These guys have been slow to move. We have a bit of a topping formation, right? Double topping formation. Very thin volume yesterday as well in the NQ across the board. Very, very thin volume. And so this is something important for us to think about. There are a lot of people really not participating in this upward draft in the near term, maybe waiting until after the Fed speaks and then they'll move in. We know the tech side had a really great day yesterday, new all-time highs for several of the Mag 7. Again, under very shallow volume. Put wall, very close. The put wall is at 26,177. Call wall, 26,300. You know, folks, this is not, excuse me, that's 26,180. This is going to break, right? This is absolutely going to break. Don't know the direction, but it is going to break. And if we look at the distance, we really could lever up, you know, another, what is that? 100 points easily and send us up into higher levels. Where we sit currently, where is our 2.0? 26,600 is the next extension on my measured moves. And then we've got a gamma line at 26,750. Yeah, that's about it. Isn't this interesting? The last 3 years, April in the NQ has been down, up only 30% of the time, but that's just a 3-year window. All right, that's what we're staring down. If you're thinking, hey, Anne-Marie, what about upside? Can't you measure something there? We can. Looks like we've got a range that's about yay wide. So that puts us up to, I'm going to borrow this line, 26,380 if we can get past 26,300, right? So it looks like another 100 points to the upside. Prepare for the wicks. We are likely to have some, but at this juncture, the better bet is to wait for the test of the VWAP and move to the north. All right, I want to look at oil today because there is a little bit of a chess match going on in the big picture. Today, we have the EIA report. Yesterday, Cushing is in the area in Texas where we get a lot of our oil. We had a rebound on the amount of oil that came out of the ground that they were talking about. And so, remember, more oil out of the ground, cheaper oil gets. So we're staring this down and looking for price action that gives us directional motion. Right now, we're ping-ponging pinball action with the VWAP, and we also have overlapping candles, right? So we know we're in a range. When we've got those overlapping candles and we're in a range, we want to sit sideways in our framework when we think about, okay, what's going on here? And this is the framework that we're in. Upper level, $60.70, potentially a good short. Of course, the EIA report is today. Just watch what's going on. As we continue to try to keep our energy dominance, the Saudis continue to release more oil, and that's going to bring price in, and it's going to threaten our ability to have dominance. Big chess match going on here currently, and forward motion still suggests that we've got weakness in demand showing up in the future. Put wall sits at 59.50. Call wall for the 0 DTE, 61. Where is the, whoa. the call wall, which was up at 65, has now moved down to 61. The put wall remains at 55. Very interesting. Got to be careful here. If we do a measured move, very simply, right, we clone the box, move it down, and it gives us a support structure of 58.80, which is right around here. So, but there are a lot of gamma walls there, and the 0 DTE puts. Obviously, you can see this is pretty bearish, but they are fighting a little bit, and it's going to get quiet into the EIA number. Let's take a look at gold. Gold's rebounding fairly nicely, right up above the call wall. This is an interesting patch, right? We're well above the VWAP, well above the tight moving average. These are both shifting up. The 63 is still downward sloping, but we've had a pretty good recovery in the overnight. That overnight floor looks like it caught the gamma wall, gamma line 10, and we've got higher lows and higher highs. So, could this be a flag or could this be a reversal? Yes and yes. So the question then becomes, well, how do we look at it? My thought is this, folks, and you guys know, I'm bearish gold, but I'm not going to be bearish gold if this is the trend line that I'm looking at on the day, right? And if they pull, if they give us a 25 basis points on inflation, on the interest rate, it should lift a little bit more. Right now, the anchor, I'm going to move this line because I don't think it's relevant anymore. The anchor of the VWAP from 2 days ago at 40.41 is going to be our next line in the sand. If we get up over that, notice the heavy congestion that puts us at 40.62. That's going to be the next line that we're working towards. Heavy congestion, and we will walk it up until it collapses. It's sitting at the call wall, so they're going to try and fight to push it down in here. But, a lot of people are very bullish gold. So what would I do? I would try to short it here, but only for a scalp up at the wicks. But primarily, I'll be looking for a retest of this heavy congestion zone, and that still gives me 3,985. That was about the resistance zone on yesterday's price patterns, also value area low. So I would like to see it pull back, and then I will take a long there. I'm being very objective about price action simply because, you can't sit on the wrong side of a gold trade for long if you plan on keeping an account. All right, so there we have it. Let's finally look at SPY. Yeah, I feel like we are off to a blow-off top myself. News just came in from Paul Tudor Jones. That's why my that's why my picture yesterday said summit ahead, because we are heading into a topping space. Something's going to give, right? I've just been around the hot minute is all I can say there, and yeah, something's going to give. And so, no, I don't want that one. I want this one. So what do we have? Trend, upside. What does that mean? Buy the dips, right? We're going to buy the dips. Hourly formations, they're just walking right up. I am going to remove all the rectangles, and let's see if I can get a better energy look in terms of where they are accumulating and distributing. Feels like it's about that wide in general. So what do we have? A topping formation. Where is the call wall? 690, right? The resistance area is 700. So still, this one is still saying 700. Sideways motion, dips or buys. It's going to be good news when he says he's going to pull earnings in, but they are there's stuff going on with liquidity underneath the covers. I don't know how they're going to manage it. And I mean, the Fed put themselves there. I have no sympathy for the Fed. I'm not even sure if they're worthwhile to own or have, really, but whatever. They're between a rock and a hard place, and this is going to open up a liquidity spigot in the market. We'll see what happens. Upside pressure events from the dips, right? So dip 686, 660, and then buying again. I would go support to resistance and get out. Pull back, support to resistance, or walk a stop up with you. It's going to be a very interesting day, but once again, very shallow volume, and the highest candlestick of the day prior was a selling candlestick into the last 30 minutes of the day, right? That's not always the case of what happens next, because here on Friday, we had a big selling candlestick, and then news about China came out, and here we are, off to the races. All right, so what's the model? What's the model of every day? Let focus be your superpower. Pay attention to where price is accumulating, and do not expose yourself to a ton of risk. If you don't have a feel for what the market is doing, or your strategy seems to be a little weak on the edges, just don't trade. All right? I will chat with you soon, folks. Stay frosty.